All right, guys and gals, back in the action here this evening. It's about that time of day again, after all. Tuesday evening, March 24th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups setting up for tomorrow. That's Wednesday's trading session, and I've got a great video newsletter in store for you tonight. As you can see, the charts are already in the background. We get some oil, some S&P, and some gold. Got a lot to talk about, so we're ready for tomorrow's trading session. And speaking of tomorrow, got a bunch of big news reports coming tomorrow morning. We'll check the calendar tonight to make sure we know exactly what the schedule looks like for tomorrow and the rest of the week. So it's great to have you with me here tonight. Before we jump into the video though, as always, please make sure you subscribe to our YouTube channel. That way you never miss another great video. If you have any questions about anything we talk about tonight, drop those questions in the comment section below. And thanks for tuning in. If you tune in every evening on this video newsletter, show the love by hitting that thumbs up button for me. Always appreciate your time tuning in every evening on this video. Speaking of the video though, let's get the introduction out of the way. Let's get this session started. I'm going to kick off tonight's video with the economic news calendar for tomorrow. Let's grab a look at the calendar here, courtesy of Econo Day, and let's see what we have on the schedule for tomorrow. Tomorrow, of course, is Wednesday. It's March the 25th. We got a couple more days left of this month of March. We've got two big news reports on the schedule for tomorrow. You got the durable goods orders at 8:30, and you got the petroleum status report at 10:30 Eastern time. Now, of course, both of these news reports are usually very big market moving events. The durable goods order is always something I'm looking forward to just after the opening bell in our trade room every morning. And of course, later on in the morning, tomorrow morning at 10:30, we've got that weekly petroleum status report. The most important thing will be make sure you're keeping an eye on the time tomorrow morning. We open up our trade room at 8 o'clock Eastern time, so we'll hurry up, get our charts all prepped up, and be ready with a front row seat for that durable goods orders at 8:30 Eastern time. But then watch the clock tomorrow morning, because as we get closer to 10:30, we have to really be careful on markets like crude oil. Crude oil is a market you don't want to mess with after 10:15 ahead of that 10:30 inventory report. So what you want to remember is, if you're a crude oil trader like I am, right, we love oil in our trade room, but Wednesdays are always a smaller window of opportunity because you got to worry about that 10:30 report. So my job on a Wednesday is to keep my eyes on the time. After 10:15 a.m. Eastern time, I sit on hands and I wait until about 10:45 Eastern time after that news number comes out. Now, I realize that most news reports will usually use a 5-minute buffer before and after, but this is not most news reports. This is our weekly inventory report, and what happens is the markets tend to get a little bit sluggish and sloppy ahead of the news, and then it becomes wild and volatile for 5 to 15 minutes after that news comes out. The moral here though is watch the time tomorrow morning, right, if you're trading on crude oil. And don't forget, we're going to go over all of this and trade this stuff together tomorrow morning at the opening bell in our trade room, which is every morning at 8 a.m. Eastern time. And speaking of which, I'll put all the links to get registered as a member and join me tomorrow so you can do this with me. I'll put all the links for that trade room access as a client of mine in the description of the YouTube video and right below the video if you're on the blog at Sideways Markets. Now, those are the two big news reports we have here for tomorrow. But there's one big elephant in the room. We're still waiting on that big U.S. stimulus bill that we talked about in last night's newsletter. I watched last night. Markets were rallying and pulling back, and you could feel today that everybody was really waiting on that stimulus bill. Now, we heard last night they would get the job done last night. We're hearing today to expect some sort of approval for today. As I said in last night's newsletter, there's a big, again, there's kind of a big cloud hanging over these markets right now. We saw a very nice strong bull rally on most of our markets today because of that kind of stimulus hopes. But I'll tell you right now, they've really got to put this stimulus bill together, because if they don't, this rally on the S&P may fall apart as we go into the rest of this week. So although we know we've got two big news reports for tomorrow, obviously the big news we're all waiting on is that stimulus bill coming out of Capitol Hill here in the U.S. Will it happen overnight? Will it happen tomorrow? Your guess is as good as mine. If it happens overnight, tomorrow is probably going to be a very busy day. If it doesn't happen overnight and we have to wait to go into tomorrow, we may get a little bit more of what we saw today, a lot of jitters in the price action. My best advice would be, if we don't get that news report tonight and we have to wait on it tomorrow morning, be very careful, focus on traps and failures. That will probably be where your best setups are going to be. If we get the news report tonight, if we get that stimulus bill tonight, expect tomorrow to be a relatively wild ride. We'll want to use slower time frames, widen out our stops and targets, and cut our position sizes down for tomorrow. So I've really got, do we hear tonight? Do we not hear tonight? And again, tomorrow morning, we'll know more obviously tomorrow at the opening bell. Don't forget to come out and do it with me. That way we'll execute the plan together. And again, I'll put all the links to get registered down in the description of this video. So now we know what we know about tomorrow. But again, there's that big cloud hanging over these markets right now. Everyone's waiting to see if we're going to get news on that stimulus bill. Now, let's put these charts together here tonight. And again, keep in mind, if we get the bill passed here sometime in the late night here tonight, right, a lot of this might have to be updated when we come back to our charts, right, tomorrow morning. And again, if we don't get anything overnight here and we're looking into tomorrow, we may see some ranges develop as the markets start to really, kind of walk on eggshells ahead of this big stimulus package. So a lot of this is a lot of known unknowns right now. I'll do my best to get things prepped up, go over the situations we're watching for tomorrow, but make sure you're with me tomorrow morning so we can finish the job we started here this evening. Let's jump into some charts here right now. I got some oil, I got some S&P, and of course we got that gold here. I'm going to start off though with this S&P 500 here tonight, because the S&P really it's got a really good clue you can see here right now that I want to make sure you are aware of. First of all, we know the S&P, everyone's waiting the stimulus package, right? We all know that. That is one big cloud hanging over our head for tomorrow. What do we know though, right? We know right now the market is obviously bullish. It looks like they're trying to push through this measured move as we go higher. Bull markets or trending markets, I would say, always tell me to look for those measured moves. And you can easily see we're about 3 legs up right now on the S&P. Now, 3 legs up. This is a big clue, right? It is. Usually, and there's always exceptions to this rule, but usually whenever a market goes 3 legs in one direction, the following move is usually a bit of a sideways range. So I'm definitely anticipating a range up here. Now, obviously, if they pass this bill tonight, this thing could get blown out of the water, right? We may see a big nosedive and a recovery tomorrow. So there's a lot of there's a lot of things we have to keep in mind here if we do get that stimulus bill passed here overnight. But usually, under most conditions, whenever we see 1, 2, 3 legs, we're going to see some sort of range. Now, that doesn't mean too, we may also maybe pull back, right, and do it again. So don't be afraid, right, to go 1, 2, and 3 and then get a range up here. Just be aware though, when you're this late in a trend, right, this trend is not a brand new trend. We're 1, we're 2, we're 3, we're relatively late in that trend, right? The people who bought way back here, the people who bought these pullbacks, they're going to be taking profit up here. So it's really important that we don't try to guess or gamble or buy high right now. That's the really important part of this. I know everybody wants to get in so they don't miss that move back to retest all-time highs, but let's not get too crazy here. Let's trade the chart that we see in front of us. We're 3 legs up, and we really start to anticipate a range up here as buyers take some profit. Also, probably the biggest clue on this chart right now, I'm going to get rid of these arrows here for a moment. Probably the biggest clue on this chart is we saw that big roaring run, right, that went up here right after the opening bell and pretty much continued all the way through into lunchtime here today. But then we saw that nice steep pullback. And what happens is buyers are waiting, right, to buy that pullback. If you bought that pullback, where do you think your target would be? It'd be right back up to retest the high. Where are we right now? Yeah, we're right back up retesting that high. What we have here is we basically have mission accomplished for these buyers. This is the most important thing I want to bring to your attention. That strong move up, that sets the table. That tells buyers they can buy that next pullback with their target back up to retest the high. Remember, guys, anytime we see a strong move in one direction, you know the odds of retesting that extreme are really, really good. So buyers, they're going to eat that for lunch, right? Literally for lunch. And it literally happened over lunch, right? They're going to eat that for lunch. They're going to love to buy that pullback because they know the odds are so high that they go back to retest the high. But look closely now. Now look where we are. We're right up at that high. What does that tell you? This is not a place for me to be getting into a trade right now. This is where a lot of buyers are taking profit. So you got to be thinking about, we've got two big clues right now, don't we? We've got a 1, 2, 3 legs up. That's usually, and again, there's always exceptions to this rule. You know, sometimes really strong trends will go 4 legs. So I'm not saying it can't. I'm just saying though, right, we are probably at an area where, unless we hear something about that stimulus package, you got to think about some ranges here, right? Or of course, right, maybe a deep pullback off this high. Big thing though is we get that strong run up, that pullback, those bears fail, and it snaps right back up to retest the high. Both of those clues on top of each other tell me I've really got to be careful here right now. So looking at the S&P here, I really have kind of 2 scenarios here right now. One would be, do we go pull back here, right? Do we pull back? Because if we pull back, which happens a lot, now this becomes a range. And if we have a bull market into a trading range, how do you trade it? You buy below the range with what we call failure patterns. We'll talk about this more detail here in just a moment. So that's one scenario you could be watching for. Another scenario would be if we make a run higher. And if we make a run higher, I've kind of got this idea of getting above the measured move. If I can get through that measured move, I know that round number at 2,500. I know that last major swing is probably going to be on our radar. If I can get a little more proof here out of these buyers, then I can start structuring a better channel here for me to buy that next pullback. So I really think it's go time right now for these buyers. The buyers have to put up or shut up right now. They've got to hold this, or else we really run the risk of getting a very significant pullback. And again, right, I also want to be ready for any possible ranges that may form up here overnight because of where we are, right? You know, in all reality, buyers who normally would take profit up here, you know, they may look at the headlines today and say, no, I'm not taking my profit yet. I'm going to see if they pass this bill and see if it jumps, right? A lot of buyers may be, I think somewhat foolishly, I think you're going to see a lot of people buy the rumor earlier this morning, right, and sell the news personally. But, you know, my personal opinion is really irrelevant, to be honest with you. We have to trade what we see. I would worry, though, if I was a buyer up here, I would worry that once that news report comes out about the stimulus package, they're going to nosedive, right, take me out. By the time I chase after it down here, it'll swing right back up again, right? So I would imagine we're going to see people buy the rumor earlier today and sell the news right for tomorrow. Just my gut instinct on this, but again, you should not take my gut instinct as a trading strategy. It's just something I'm looking forward to seeing more of so I can trade that tomorrow. Now, what's the plan? How do we put this right on paper, so to speak, right? The biggest clue I have is that high. And I want to keep in mind, if we pull back, this becomes a range, right? So if we see this thing pull back right now, I've really got to be careful. This channel I'm drawing here right now, that channel right there, that channel should not be trusted, okay? You can't trust that channel. If they hold that pullback, then good for them. Then we can worry about the breakout going higher. We'll talk about that in a moment. The reason why I have that channel on here is because I want to show you I've got to get up around this area up here. If I can get up around the high of kind of that hidden channel here, now I start getting a lot more confident and getting more aggressive at these highs. So honestly, you might want to even just ignore that channel for the time being. Let's assume first of all we get the pullback. Right? Let's assume first of all we get that pullback. Now there's going to be two types of pullbacks here. One pullback is going to be the nosedive, and the other pullback will be the stair step. Make sense? Okay? If I see a nosedive, a pullback, right? In other words, we actually get people taking profit on the stimulus bill, right? That's again, I don't want to say it's going to happen, right? But I would imagine a lot of people were buying the rumor, right? And they're probably going to sell the actual news here, right? Taking profit, basically using the inexperienced traders who are buying high, use them to sell too. They can get out of their long positions and then buy it back at a cheaper price. The moral of the story, though, is if we get this thing just shotgunning lower here now, that momentum is going to be very strong. Now, I've got a lot of reasons to want to buy down here. I get some rising support, I get a swing support, and of course, I'll be below this trading range. The best way for me now to trade that real kind of shotgun move now is to look for what I call a nested failure pattern. And it's pretty simple. I'm going to wait for the bears to try once, try twice, and then that will tell me right where the stops are. And my strategy is I like to buy into stops, because some of the easiest money you'll ever make is when you are getting into a trade buying at support, when those counter trend traders who are not looking at the big picture, right, they're simply watching this. Right? When I was a rookie trader, I had a hard time, right? I always focused on the short term too much, and I would sell pullbacks, right, in an overall bull market and get caught. So I'd like to be able to catch those, I say rookies, but really it's really any impatient seller who tries to sell that move down. Now, of course, that may not be as sharp, right? For example, right, we may only see it kind of stair step its way down. If it stair steps its way down, or even better, if we go back into the range and bounce around a little bit, then I can use that classic failure setup where I'll just simply wait for that breakout below the low. I'll wait for those sellers to try to sell off the moving average. Then I'll use my failure pattern to buy into stops. And then if we get lucky, we'll get that pullback just before we get back into the range, and we can finish her off right with a pullback pattern. Now again, remember the prerequisite for this, the assumption is we don't just jackknife, right, running lower. The assumption here is we stair step, or we kind of stagger our move as we go. So a sharp move down would be a nested failure pattern, right? If we kind of stair step our way, right, then I can use that typical two-try failure pattern. Again, if we pull back, I don't want to be trading inside the middle of this range. Now, speaking of range here, like I mentioned, there is a likelihood at some point tomorrow that this range that I'm looking right here, this may not even play, right? The range might actually be something, like this, right? We may end up chopping around up here inside of a new range, up around that measured move. Very likely, right? Just as likely as the market pulling back sharply, to be honest with you, because traders may be waiting for that stimulus bill. Now, once I know where that range is, what I'm going to do is I'm going to look for opportunities to buy below the range. There'll be a bull bias to it at that point. And at that point now, I'm going to look for that same idea. I'm going to wait for those buyers to run out of bullets, right? There's only so many buyers. I know the S&P is a very liquid market, but there's only so many buyers that are willing to buy up there. And once I see those buyers run out of bullets, the market pulls back now. Now I can look for that seller failure, right? A failure, basically a breakout pullback failure, and I can buy going back up into that trading range. Now, as we go higher, if we do try to go higher here, most important thing is you got to know where we are. That 2,500. big round number, juicy round number, I would say, right? That 2,500 has it's got a good ring to it, right? Doesn't it? It's a big number there for those buyers to use as kind of a magnet, right, for price here. So we know that level overhead is definitely something we want to pay attention to. Something I need to see, though, like I said earlier, if you put that channel back on, like I mentioned earlier, that kind of gives me a visual now for where I've got to get to just to get some more confirmation, to be honest with you, right? I just don't want to be buying up here. So if I can get this run going higher here, I'm not going to really use this channel, but this channel is a good visual for kind of how far I want to see this thing go. What I really want is I'd like to see us, right, get that next run higher here, allow me now to grab my hidden channel, right, off of that major low, and then buy that next pullback off the low of that hidden channel. Okay, the key here is going to be to make sure I do this before we get up to that 2,500, and change up there. That'll be the key here. So again, if we can get that break higher here, keep an eye out for that hidden channel off of that low. If we really punch, if it really punches and runs higher here, I may have to widen it out a little bit and go something like that, right? It'll be a lot of kind of how it fits as we go higher. And again, not to worry, we're going to do this together tomorrow in our trade room. Don't have to worry about that, right? We'll have you covered for that as we go. Another thing to keep in mind here would be if we grind up the top of that channel, right? Let's say, for example, we grind, right? We jump up and we kind of grind up the top of that channel like this. If we see that pattern, that's called a two-try trap pattern. One of my favorite patterns if, and again, this is a very big if we can get a strong move up, a shallow pullback, and you'll see it'll kind of grind its way up the top of that channel, right? The market is so bullish at this point, it's probably not going to pull all the way back, right? Probably not going to get that big of a pullback at that point. If we get that little shallow pullback in that higher high, I'm looking for what I call a two-try trap pattern. Again, before we get up to that 2,500. Now, we may also see it just jump right higher here. Like I said, at some point, these buyers are likely to take some profit. Keep your eyes open for a range up here and buy underneath that range. This would probably happen sometime tomorrow, right? We jump up, we start going sideways up there. When we start seeing a sideways range, we buy low with what I call a two-try failure pattern. Now, these failure patterns, these are very, very common. We saw a nice, big, beautiful run earlier, nice deep pullback, and look what happens. They pull back to the moving average, the bears try to sell, and sure enough, we see a failure into pullback combination. This seller failure into bullish pullback combination is very, very common. In fact, we do a deep dive into that failure into pullback combination in my free trading course. I'll put a link up here in the upper right-hand corner for you. If you're not going to be with me trading tomorrow in the trade room, the next best thing is to grab that free course linked up in the upper right-hand corner. That way you'll get a much deeper dive into all of these setups that we're talking about tonight. At the very least, then, you can follow along with me and really get the most out of our time together every evening on this video. Now, there's one thing I haven't talked about. How does this market turn bearish? Is it possible? Oh, absolutely it is. If people do buy the rumor and sell the news, there's a good chance we see a strong pullback. Now remember, a strong pullback, as we saw back here, isn't necessarily a reversal. What has to happen is they have to actually hold that pullback now and really show us some strength, right? The bears, they couldn't get the job done there. Will they get the job done over here? If they can get that job done and they can jump off that low, now I start looking for a new low. I mark up that major high, I draw my hidden channel, and I'm looking for a sell right off the high of that hidden channel. Now, I'll be honest, sometimes we don't get the pullback. If the market runs, it keeps running, if this thing just, if it just hits the sell, if it sells off here, I will at some point start looking for that two-try trap pattern. But be very careful though, right, trying to get too aggressive on this sharp pullback. You're going to really want to make sure you see that strong move down. And of course, I'll look for, right, those two-try traps off those hidden channels, right? They always want to include those with a level of resistance. So we definitely have ourselves ready for tomorrow. My biggest concern right now, again, like I mentioned earlier, is location, location, location. It looks to me like we might be walking right into a trap here for these bulls. So don't buy high, wait for the pullback, or wait for more evidence as we go higher. And again, don't delay here. Make sure you get registered as a client. That way you're with me tomorrow in the trade room at 8 o'clock Eastern time. Everything I'm talking about tonight, all the links in the description of the YouTube video. Let's keep going here. How about some gold here tonight? Now, gold is definitely something we're watching closely right now, because anytime you hear the word stimulus, right? Anytime you hear the word, right, stimulus or quantitative easing or printing more money or helicopter money or checks coming at you, right? Anytime you hear this stuff, you always know people are going to buy the intrinsic, right? The intrinsic value, that heavy metal, right? That gold. We know that gold is definitely going to be on our radar right now. The most important thing we know about gold is we're obviously bullish. There's no question about that. It kind of looks like the market was a bit drunk today. Yeah, that would make sense. Everyone's kind of nervous or kind of waiting on this stimulus package. A couple things I see though here is that big high at 1700 right now, right? You can tell Nana, all her jewelry is worth a lot more now, right? 1704. Boy, when I was a new trader, this thing was pushing 2,000, right? 2,500, right? We got a long ways to go there. But you'll notice that big top there, right? 1704, 1705, that is a big psychological level. So remember, you got to be thinking as we try to go higher, there's not a lot of space up here for buyers to wrap their arms around this. There's not a very good risk-reward ratio as we go higher. Just like the S&P, we're going to want to see some proof going higher before we can really start to want to be a buyer on this gold. If you want to be a buyer on the gold, you missed your opportunity early on this morning or right just before lunch. At this point now, we do not want to be buying the high of this trading range, and we certainly don't want to buy as the market goes higher. Now, I think the biggest clue on this chart, though, is actually the triangle, right? Because triangles are like ranges with a timer, right? They really are. They're like ranges with some sort of kind of like a countdown timer, right? As you can see, I got my range marked up, and I got a bull bias, right, into that range. And we know that anytime we have a bull market, right, into a range, I want to buy underneath the range with a seller failure pattern. This is nothing new. We talk about this nonstop on this video newsletter. So we knew what to look for today before lunch, right, on the gold. The big problem we have right now, though, is we're back inside the range, so we definitely don't want to trade in the middle. I want to buy low underneath, I want to sell high above, and I want to avoid that middle. Another thing here, again, is that triangle. That triangle, right, ranges can keep going on forever, right? That range can keep going sideways forever, but a triangle doesn't have that same luxury, right? Triangles, as we get closer to the end of that triangle, what happens? We start getting almost like a jack in the box, right? Dun, 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 right? And all of a sudden, boom, and it breaks out. Now, sometimes those breakouts happen with the trend. Sometimes those breakouts happen against the trend, right? But you can almost set your clock to it once we get around the very fine points, right, of this range or of this triangle. So we really want to be ready for that, especially if you're trading in the overnight Asia, right, into London sessions, because as we get narrower, that explosiveness starts to kick in. So we get a lot to cover here tonight, right? My biggest thing right now is I don't want to trade in the middle. I want to buy low, I want to sell high. Now it's a range. So if I can get underneath the range, I'm looking for, right? I'm looking for those failure patterns into combination pullbacks, right? If I get below the range here, I'm looking for a seller failure into pullback combination, right? You can see a little bit ugly version of it right here, seller failure into pullback combination. And again, make sure that pullback is before you get back into the range, a seller failure into pullback combination, right? It goes off the moving average. Bears try to get short. We're buying into stops, right? Once the bulls see they fail, they buy the pullback before we go back up into that range. Stay away from the middle. Now, how do we sell off the high here? Can we sell this market off the high? We can, but because we're so bullish here, I'm going to use one of my most conservative sell patterns called a crown reversal. As we go higher, I would normally say let them try once, let them try twice, but with this stimulus package coming up, I'm really going to want to see a trap up here. One try, two try. If I want to be a seller on this market above the high of this range, right, you can be more aggressive than this, right? But personally, I'll be looking for a one try for the bulls. Again, I call these nested patterns, but when I have the little trap high, I call them crowns, crown reversals, right? They almost look like a head and shoulders pattern. And what you're looking for, you can see an example back here, right? We go up, the buyers try once, the buyers try twice, trap high, right? And everyone piles on to sell that trap. That's the same exact thing, right? I'm referring to here for tomorrow. That's the pattern I'm looking for here to be a seller off the high. So it's seller failures off the low, right? It's crown reversals, right? Double top is the bare minimum. Trap high is ideal for that sell going back down into that trading range. Now, real quickly here, what if we get to the point of no return on this triangle? What's the plan then? Now, one scenario is we see a real strong shot lower. If it really shoots lower, just like the S&P, we talked about this. If it really dumps, right, and takes a nosedive now I'm not going to fight that momentum. I'm going to wait for the one try, wait for the two try. What do we call these? Nested failures, right? If I can get a trap low, even better. It's not required for a trap low, but boy, oh boy, would that be the cherry on top, right? That would be the frosting on top right there. A trap low would be great. The bottom line is minimum, I want to see two tries. Again, this is not your typical pullback. This is right at the breakout of that triangle. Now, don't forget too, right? If we go right, get nice and tight here, right? Nice and tight, and we see breakout here, keep in mind, they may hold this pullback. And they may run that thing lower. What is that called? That's called a 1, 2, 3 reversal. What's the plan then? Mark up those lows, find that high, right? It's a hidden channel, and sell off that high, right? Called a 1, 2, 3 reversal into hidden channel pullback. Now, what if we don't get a pullback? Sometimes it doesn't. Right? Sometimes it just dumps and keeps going. If it keeps on going, right, what usually happens is it'll do this. It'll keep going lower. It'll give you a shallow pullback, and that shallow pullback is usually the giveaway because now everybody's going to sell with that trap. What's that pattern called? It's called a two-try trap pattern, and you'll usually find some sort of hidden channel here, right? Look for that narrow channel there to incorporate as a key level of resistance. At that point, our objective is pretty simple. Get back down to retest those lows at 1560. And again, I would imagine by the end of the day, with this being more stimulus, we'll probably see it come right back up again towards the end of the day. But we can still look forward to that short on the way down. Now, once again, if we keep going higher here, right, or if we run into that breakout here now, right, and we run higher, keep your eyes open for a 1, 2, 3 breakout. Mark that high, mark that low. Basically the same pattern, right, going higher as it is going lower. You don't want to trade the breakout pullback, the first pullback, because again, you're trading the high of that range. I'll wait for that second pullback. Again, 1, 2, 3 breakout into a hidden channel pullback. Or if it doesn't want to pull back and this thing rips higher here now, I've got my eyes on this area here. That would probably be visually where we want to get to. If I can see them now grinding higher with that higher high, yeah, trap low here, usually be just below the moving average. That, my friends, is a trade worth waiting for. A lot of times, too, you'll find a hidden channel there, right, as we go higher here. And then who knows how far this thing can go from there, right? We might see this turn into one big measured move as we go higher. So I think, guys, we're covered here. I think we're good to go. The triangle is kind of that ticking time bomb here, right? Be careful of those sharp pullbacks. Be disciplined not to trade those breakouts. And again, like I mentioned earlier, tomorrow morning, Come out and do it with us, 8 o'clock Eastern time. I'll put all the information to get registered in the description of this video, or if you're on the blog, that big blue button to learn more about membership on our website. Let's keep going here. Gold is looking good. We got one more market though. We can't forget about the oil. Oil is obviously running into the big news report tomorrow. We get the weekly inventory report tomorrow on the crude oil, the black gold, the Texas tea. What do we know about oil here right now? There's a lot to kind of unpack right now on the oil. First of all, the most important thing that I see here right now is the day began as a strong move higher. Now, we've talked about this. Anytime we see a strong move in one direction, we always know there's almost like a bullseye right back up on the retest of that high. Now, you can see though, right, that in addition to that, the market, another big clue, came back to that gap. We talked about this last night on the newsletter. Whenever there is a Friday evening close, that turns into a Monday morning gap, which is exactly what this 2365 is, right? That was the close from the end of last week, right? Last Friday's session. Now, again, it really isn't a gap, so to speak, because it's already been filled, right? It's not like an unfilled gap, but, this is one of those examples where don't ask me why they do this, right? I'm just here for the dancing, right? I didn't choose the music. I just dance along to it, right? I didn't set the rules. I just play by the rules. When we have a Friday close like that gaps on it's technically Sunday night, right? Friday to Sunday night. Friday closes at 6, right? Opens up on Sunday. Friday closes at 5, right? Opens up on Sunday at 6 o'clock. It gaps down. Usually those gaps, they're going to keep acting like magnets. And it's no different here on the oil, right? So you'll notice what happened. The market pulls back all the way to that gap and kind of goes into kind of like a black hole, right? Kind of sits there inside of a range. Now, this is more than just your average pullback, right? Because you'll notice we had all that movement going higher. This would normally be an easy seller failure and a retest of that high, but you can see those buyers had one thing on their mind: take some profit and let the bears sort it out back around that gap. This I think is probably the biggest hurdle we have tomorrow, because you'll notice that unless these buyers, unless they can hold this reversal, unless they can show us some proof here, and even then, there isn't a lot of open space up there. Unless they can really show us some proof, this range is probably going to keep acting like a magnet, right? Not only is it a gap, right? Hell with the gap, right? It's a range. And what is a range? They're balanced. Ranges are like magnets, right? What goes up will come back down. What goes down will usually come right back up. And since we pretty much finished the day today with a 1, 2, 3 reversal into what you could call expanding triangle, or call it a range, whatever you want to call it, we are bearish right now, right? That's why I'm not calling this a bull market. That's why I'm not looking to buy this pullback right now. What I'd like to do is get up around these highs, get these buyers to try, right, to buy up here, not knowing where they are, not realizing that range took firm control of this market this morning, and dump it back down into that trading range. But as you can see, though, there's a lot of cooks in this kitchen right now. The bulls are definitely still here. I mean, for crying out loud, we got this stimulus package breathing down our neck right now. So I do think this could honestly be, right. And again, I'm kind of walking my way through this with you. It could easily be a deep pullback, right? We see the bears try once, and they may get the run. So we definitely have to be aware of these buyers, right? They're clearly lingering out here right now, but I can't exactly be a buyer in this market right now. I love this hidden channel. I love this rising, right, resistance line. I love this area here to be a seller. It's a range, so I definitely like the idea of selling the high of that range. But what do you think? If I wanted to be a seller above the high of the range, but I was worried about the buyers being a little too stingy right now, right? Because of obvious things we talked about so far. What do you think would be the best way to structure this entry? It would definitely be with a nested failure. It'd be a failure pattern because it's a range. Anytime I see ranges, right, it's a buyer failure to sell above the high, right? It's a seller failure to buy below the low, right? It's a 1, 2, 3 breakout to trade the breakouts. Same thing, right? 1, 2, 3 breakdown to trade the breakdowns, right? I mean, that is pretty simple and straightforward here. But again, as we go higher here, I love this area. So to be a seller on this, at the very least, I'm looking for a 1 try, a 2 try. I would love to get a trap up here. A trap would really probably be the best possible scenario for us to be a seller on this, right? Get this thing to push up, get the buyers coming in once, coming in twice, and I'll bet we get a chance to hit that trend line, right? At the very least, this trend line right here. Right, at the very least, that trend line. I don't want to get too aggressive with it because of all these buyers on the tape. And you're more than welcome to call me a sissy on this, but I've learned over the years not to fight those bullish moves, right? Because they consistently try to retest that high. So the best way in my vision right now to sell off this high for me tomorrow is to wait for those buyers, try once, try twice. Ideally is that trap high, and when you get it, hit it, right? Hit it. Now we should be able, in this case here, to get a nice reversal back into that range. Measure the amount of the move up, measure the amount of the move down, and that should put us in a pretty good target down around, surprise, that $22 a barrel area that we talked about in last night's newsletter, right? So that's what we're looking for here to be a seller as we go. Now, if I'm right about that and the market, right, and the market comes back down into that range, how do we do it? Do we slam lower? Right? If it slams lower, I've really got to be careful now to be a buyer because all that momentum is so bearish. So it's 1, it's 2, and then back up. If they slam lower too, they may catch a reversal completely. Strong move down, right? Hold that pullback and run. If we get that big jump off the moving average, it's on the downside. Mark that low, find that hidden channel high, and we're selling off the high of that hidden channel. Target, of course, now, again, just below that 22. There's a lot of opportunities if we can get this thing to reverse off of these highs. And of course, there's also a chance too, we go up, we fail, we go back in, and we get comfy around that gap again. If that's the case, we're looking for buyer failures again. It's kind of, back to normal again, right? We look to sell above the high, we look to buy below the low with those failure setups. Now, how do you buy this market? That's the question, right? How do you buy it? Here's one pattern I'm definitely looking for. If this thing jams higher here, watch for that shallow pullback, that new higher high, and that's going to tell you we're trying to get up to that target zone. At that point now, and again, this whole thing starts with a strong move higher, a shallow pullback. Usually it barely touches the moving average. Once you get that shallow pullback, now you know you've got that 2-try trap pattern. These are very reliable, right, on those hidden channel lows. Make sure you always combine those buy setups with some sort, right, of support level. Or it's a 1, 2, 3 breakout. Mark the high, mark the hidden channel low, and we're buying the low from there. Or maybe it runs, right, spikes up and goes sideways up here. What do we do in a sideways range? Failure patterns underneath that low. Right? And then don't forget, we may also jam higher and start going sideways. Now, how do you know the difference? How do you know the difference between a range up here and a 2-try trap? A 2-try trap will be a strong move up, a shallow pullback, and an obvious higher high. Right? It's the combination of that shallow pullback with that higher high that is the clue. Right? A range will not do that. A range will come up, right? Strong move up. A range will come up, it'll pull back, it'll go, right, it'll double top, right? It's gonna muddy the waters up there, right? It'll look like that, right? That's so you know it's gonna be a range up there. Mark that, right? Mark that range, 1, 2, and again, this will be if we hold in that range going higher. All right, I don't want to dilute this by going over more of these right now because a lot of this really depends on what happens in the next few hours. Speaking of which, right, make sure you type those questions in here if you have any questions for me tonight, right? Any questions, drop those questions in. Any feedback, hit that thumbs up button for me, right? Love to have you guys with me. Whatever you do though, make sure you get registered for tomorrow morning's trading session. I'll put all the membership links you need in the description of this YouTube video. I'll put a big blue button for you right below the video on our trading blog. Don't be afraid to call me in the office tonight if you need help getting registered. I have live support all over the website, so you can always chat with us here in the office if the phone isn't available. And as always, guys, don't forget, if membership isn't quite right for you, grab the free pass, grab the free trial, grab the free trading classes we offer here at School of Trade. Invest in your education. That way, at the very least, we can make the most of the time together tonight every evening on this video newsletter. And as always, as I mentioned last night, as a human being right now, I know it's scary times out there. It's very chaotic out there. So stay strong, stay positive, right? Remember, take care of people around you right now, especially grandma, right? And grandpa. My heart goes out to everyone who's being affected by this. As a warm-blooded human, I wish you the very best, right? As I tell my friends and family, give it hell out there. Give them hell out there right now. Be nice to each other along the way. As a trader, though, it's time to be disciplined. As a trader, it's time to put our emotions on the shelf and really focus on what's our direction, where are our levels, and find those setups. Guys and gals, great to be here with you tonight. We got more work to do tomorrow morning. I want to see you there with me at the opening bell. If you have any questions, you know where to stick them in the comments section below. Keep in touch on the phone tonight if you need help getting registered. And as always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.